Good morning, everyone. Morning. Hi, I'm Ketty Trivedi. I am the Vice President at Prudential's Workplace Solutions Group, and I'm responsible for product and distribution marketing strategies from a benefits enrollment standpoint. I also partner very closely with our distribution teams to ensure that we're driving all our product value propositions and our financial wellness capabilities into the market space, and more so with employers around how do we start really thinking about engagement programs for employees to ensure that they're really optimizing their benefits. What's really exciting is, listening to the earlier speaker around the importance around financial health, and I think we're all familiar that financial wellness not only is a growing theme in the market space, but more around, I think, more around just around the concepts of traditional benefits and how employers are starting to think about concerns and challenges that their employees face around whether it's lack of productivity, absenteeism, the withdrawal that we see from our 401k plans, and some of the challenges that it poses on the cost of the employee. How does one kind of start looking at some of these challenges that employers face, and where are some of the solutions from a financial wellness perspective that are being introduced, and how are we starting to see some momentum there? I'm really excited to be moderating this panel today. We have Peter Hazlehurst from Uber, as well as Shawn Leavitt from Comcast. The focus really of today's conversation is going to be more around how are we seeing some of these financial wellness programs being developed in the marketplace specific for employees, and more so from their perspective for their employees. Where are some of the outcomes that they've started to see, and where are some of the learnings and challenges that one starts to see in terms of measurement and ROI. This is again an area of great interest as the theme starts resonating more and more in the market space. And as we start thinking about financial health and mental health, where are some of those intersection points? So with that, I'm going to request Peter to introduce yourself, as well as Shawn to introduce yourself, and talk to us a little bit about why is financial wellness an important theme in your organization?
Great. Hi, I'm Peter Hazlehurst. I run payments and risk at Uber. And my job has sort of two parts to it. One is making it possible for all of you to jump in an Uber and have a seamless experience and make it easy for you to pay the way you want to pay. And we do this globally in 66 countries, moving money from customers to our driver partners and couriers and freighters and so forth. And the second part of my job is to make sure that drivers and couriers get paid on time. And we spend a lot of time thinking about how quickly can we get the money to them. We've done a bunch of experimentation. We launched a debit card that allows a driver to get paid immediately after completing a trip, which is something really we've realized is something core to the experience that we have, which is a lot of our driver partners start the day basically with no money at all, in the sense of wanting to be able to get started and earn some money today to do something special. And so we're creating a new part of Uber that I'm working on right now to focus in on how do we improve the financial well-being of these partners of ours and help them grow on the platform, and also take their money and make it work faster and better for them. So we have a big commitment in our team to create this opportunity space for our drivers and partners and couriers. And we see a complete alignment with helping them grow, because when they're more successful, ultimately we create a better place for them and their careers and their futures. Last but not least, I do a side job, which is managing risk at Uber, which is making sure all of your accounts don't get stolen and all of your hard-earned money doesn't go down the drain. So 3 different roles, but I'm most excited about the new work we're doing around creating a financial opportunity for our customers. And we treat everybody as a customer now at Uber. It's a new focus for us.
Great, thank you.
Shawn Leavitt, and as you see, total rewards for Comcast. Comcast is made up of 3 major entities: Comcast Cable, NBC Universal, and Sky, which is our recent acquisition in Europe. Comcast employees are a wide variety, everything from people working in the rides or concessions in our theme parks, to actors and actresses on our television shows, in our movies, producers, and other high-end talent. Technology at Comcast Cable is extremely important, and we have some of the best AI engineers in the world working for Comcast. So an incredibly diverse organization of 190,000 employees. Our mantra from an HR perspective is that it's our role as an organization to be focused on and improve, if possible, our employees' physical, emotional, financial, and career health. And so as an HR function, that's what we focus on, all 4 of those areas. And financial is relatively new. It was always focused on as retirement. 401k plans, pensions, right? That has been the hallmark of how we think about financial benefits. And we have recognized that there's a tremendous interaction between someone's financial health and how much stress they're under from a financial perspective and their physical health, their emotional health, and then ultimately career health, that all of those are tied together. And you can't attack 1, 2, or even 3 of those and expect to really have an impact on your employees' overall health and their ability to be extremely productive, extremely successful, and help drive the business.
Okay. No, that's really interesting. All 3 of us represent various different companies, and I'm sure everyone here. When we think about employees, and employees tend to have various different needs, and just the diverse landscape, I know that there is a lot of data out there that says that employers are seriously challenged because now you have 5 different generations in the workplace. How are you thinking about assessing your employee needs? Are there tools? Are there several benchmarking aspects that you start looking at when you're really creating these financial wellness programs? And how do you prioritize what's really going to matter to them? What I'm going to do, Peter, I'm going to request you to kind of maybe kick this off first, because I know Uber's been a lot in the news lately around the IPO, and I'm sure there are folks here that would love to kind of get your perspective on that.
Sure. So obviously we had a moderately big day last week, and I was super excited to be part of that process. Dara Nelson and the whole team really kicked it out of the park in terms of taking a pretty reasonably sized private company public, and we're very, very proud of the achievement there. There was a little bit of a dip on the first day or 2, which I think largely was exogenous circumstances. And I'm pretty excited about the fact that we raised $8 billion to actually start building and continue our mission of creating a global marketplace for transportation and an opportunity for people to find work. And we're really, really excited by that. In particular, it allows us to just be unblocked and unconstrained in how we think about creating opportunity. And that's something really special. We had an amazing all-hands yesterday. Dara was up front taking all the tough questions from our team around like what happened, why did the stock dip, and all of that. And the reality is when we can't be focused on the one-day cycles and stuff like that. Business is volatile. We have a president that's relatively volatile. And we as a team have to focus on what we do, which is really build great things that create opportunity for lots of people. We're one of the biggest creators of work on the planet, and we're really excited by that. And then what that yields is an opportunity or a responsibility to make sure that the people on the platform are being successful. And as we think about that, one of the things that's really interesting is how do we encourage them to have even just the tiniest safety net? And we all know that the opportunity in the US for dealing with a broken windshield is pretty low. Most people don't have $400 to pay for the glass, and they don't have the right insurance program because it's too expensive, so then they're stuck. On our platform, that's especially challenging because we focus on 2 sides of the marketplace, and we want to have a customer who's safe as well. So we would tell that driver, hey, we need you to go fix your windscreen. Their challenge there is they've got to find basically a payday loan. And those payday loans are an extraordinarily tough challenge. Even if you think about it from the perspective of you start the day and you have no safety net, and so you need to fill the car up with gas. And this is what I was talking about a little bit earlier. What we've done and we've seen has tremendous value for our customers and our drivers and our partners is we let them go negative $100 on their overdraft. So their balance can go negative, so they can pay for gas, so they can get on the road, they can work, they can make some income, and then they'll pay us back as the day goes through. We don't charge them any interest. It's all about opportunity for them. And this has been a key facet of how we think about the little things that we can do that have such high impact. Because the alternative is a transaction that goes like this. Hey, I'll give you $50 to buy gas, pay me $55 at the end of the day. And we all think, yeah, $5, no big deal. But it's 10% for 4 or 5 hours, which might be considered rather unpleasant. And it's obviously exploitative. But if you're a partner on our platform and that's your only choice, you're like, I'll make that trade. And we'd rather give them the $50 for free to help them succeed in their mission, because we know it's good for them and we know it's good for us.
Interesting, yeah.
Yeah. You know, it's really interesting in the traditional employer space because this is not an area where we've had a lot of data. You know, when you think about the challenges and the news that comes out that people have around payday loans, around being kicked out of their apartments, around homelessness, you recognize as an HR person, and you start talking with HR people in the organization, and we know a lot more about our employees than ever filters up to senior management, right? And it's not in a database somewhere. We tend to know which employees are housing insecure because it's affecting their, affecting their work schedule and absenteeism. We know which ones no longer have access to transportation because they're either now becoming chronically late or they share with us that fact. So we have this information, we just don't have it in any kind of database. And so one of the things we started to do is talk to employees to try to understand, what's it like to work for us? Comcast employees are virtually all, there's very few that are not considered middle class. We pay middle class wages to our employees, frontline employees. But what is defined as middle class today is very different than what was defined as middle class, say, 25, 30 years ago. And when you start to talk to employees and understand the struggles they have, you start to see some themes. And the biggest theme for us that we identified is access to credit is the biggest challenge that our people face. And it's one they struggle with on a regular basis. So then you start asking yourself, well, how does that affect them at work? And there's a lot of analytics you can start to pull together. If you get a sense for, well, how would you identify whether or not you have a population under a high financial stress? You can look at things that you have. You know whether whether people have garnishments. You know whether they have 401k loans. You know if they've done multiple 401k loans. You know if they've done hardship withdrawals. All of these things are leading indicators that you can access and look at and say, all right, these are all things that happen generally because of credit issues. And that's how we came about deciding that financial health was something we had to focus on, but in a very different way. Listening to our employees and looking at the minimal data that we did have and recognizing, wow, this is an environment that is incredibly challenging for people in what is now considered a middle class, but really is a middle class that struggles because of credit issues and because of access.
Right. I work a lot with employers, and I would say mid-sized, small, as well as large employers. And we introduced this tool. It's called like a self-assessment tool, which is really a behavioral-led tool in the marketplace 2 years ago as part of our solutions subset. And what's interesting is when we leverage that, we tend to find that when employees go through that process, the biggest issue that they say is, which I think I've heard in both of your comments, is managing their day-to-day finances. The second big piece is that close to 50-55% employees indicate that they won't be able to go beyond a month if they lost their job. So the whole loss of income notion around that. And then clearly retirement preparedness, is far out for them, because if they're struggling with just managing their day-to-day finances, thinking about near or long-term savings is kind of a far out approach. When you start seeing that, and in conversations with employers, we start seeing that some of the challenges that they face to even not only get their senior leadership to account for, like, let's invest in a financial wellness program, or how do we look at needs-based solutions. Can you share your perspective in terms of, have you faced any challenges within your organization as you've started to think about programs around financial health, and how have you overcome some of that?
Yeah, so I'll start. I think traditionally, someone who manages benefits has always faced the challenge of, or generally faces the challenge of, how do I explain to our organization why we need to invest in a program or a product, right? We've done it a little bit differently at Comcast, from the sense of, we operate our benefits platform as a business. And so we look for ways to take waste and things out of the system that allow us to invest in better benefits and things along those lines. So we operate, we have about a $1.8 billion budget for all of benefits. And over the last 6 years, I've managed to keep that pretty much flat. On the healthcare side, we've essentially kept things flat for 6 years and improved benefits. But we do it by approaching it as a business. And because we approach it that way, we can interact better with our CFOs and our senior leadership, because we talk to them about this as a business. And we bring things to them in terms that they're going to understand. As we started this journey on financial health, we did not go in and talk about, oh, we need to help our employees, and we think that by doing so we'll get better performance, right? We didn't talk about them about anything soft. We went in and said, here's the impact of financial health issues on absenteeism. Here's the impact on healthcare costs. Here's the impact on productivity, because we track productivity at the individual level for our call centers and our techs. So we can measure the impact of this. And so we said, here's what the opportunity cost is associated with financial health. Here's why it can't be solved outside of the employer market. And here's what we need to do about it. And that's the conversation you have to be able to have. You then layer in the real life stories about how effective or things that you can do. And those are the types of conversations at the senior leadership level that become really powerful.
So at Uber, we're 100% aligned on creating opportunity for our drivers and partners. And there was no hard sell on Dara, should we do this or shouldn't we do this? It's core to the business. We need a workplace and a marketplace of people that have the chance to be successful. Mm-hmm. We recognize that many of them face concerns around financial stability. Access to credit is almost impossible for many of our drivers and partners, partly because they're new to a market. We bank hundreds, if not thousands, of new people every day. So literally, you'll see this all day long. People will onboard as an Uber driver. They'll take their Uber app, they'll walk downstairs to a bank branch and say, may I have a bank account, please? Because otherwise they can't get one. Mm. And we do this every day across the globe. We have incredible responsibility to think about cash. So it's not obvious to most of you here that a huge part of our business is done in cash. Massively, really significant material part of our business is cash-to-cash transactions. And what that means is, at the end of the day, the driver owes us money, which is a really interesting conversation, right? Yeah. Because they thought, hey, I just earned $100 on this trip taking someone to the airport, and we're like, actually, we need some of our money back. And as we do that, then it's on us to figure out how to make that efficient for them, because the most interesting conversation we have with drivers and partners around the world is their lack of understanding of the cost of time. They don't realize that the cost of sending money home isn't just the 10% or 15% that Western Union or MoneyGram charges them. It's the extra hour or two that they're not driving and not having an opportunity to earn income that they're losing in that trade. And worse than that, they end up in the least favorable bank accounts that have the most service fees and the most service charges. So they take their earnings, they deposit it to a bank, they then stop working, they go to a bank, they use the ATM usually get charged a fee. They take the money out of the ATM, they find a Western Union or a MoneyGram, they fork over the 10% to move the money home. And in reality, they're really spending 20 or 30% on that trade because we couldn't help them do that more effectively. And so for us, when we talk to our partners, and we do this globally, we have an amazing operations team that's on the ground in 670 plus cities, every day interacting with them, solving their problems, saying, hey, how do I get back on the platform? I need to recertify my car, things like that. It's on us to create the most optimized experience for them, recognizing that when they are successful on the platform, they will earn more money, and the marketplace will be more healthy, and it's just a flywheel. More drivers equals more riders equals more drivers, and everybody wins as a result.
You know, there's a theme in what both of you have been talking about. It's around employee engagement and different approaches to employee engagement. When you think about financial health and mental health, I mean, they kind of go hand in hand. And what's interesting is, as you start talking to individuals that have different needs, that are in different demographic segments, what is it that you're doing, if you can elaborate a little more in the context that you've been talking about around some of the programs that you've leveraged, how have you been driving that employee engagement across your employee population? And do you see the connection happening, whether it's from your end or even from their end, to connect the financial health to mental health?
So I'll start by the fact that we were really frustrated when we looked at the market and really could not identify a partner that would help us think about this holistically. And so through our ventures arm, we incubated a company, Brightside, that is now a separate entity that we are an investor in, and a group of folks on my team are working with to co-develop product and design the platform. And the concept behind the platform is that the financial services industry is fragmented. And as it's fragmented, just like the healthcare industry, you need support at really understanding how to pull it all together. And you need to rethink, what is it that defines, the services that are really important to a employee. And so through developing that platform, what we did is, and what we are doing is, we're packaging all your financial programs in one place. So you have a single app, a single call center, a single team that supports you, whether that's your 401k, whether it's employee stock purchase plan. If you're in the pension plan, that information will be there. But then it becomes an access point to a company-provided savings account to ensure that all employees are banked, even those that are traditionally unbanked. And access to an ATM card, so that if you're unbanked, instead of you getting a hard check or even getting a debit card that has fees associated with it, we drop it into a savings account, it earns interest, you can take the money out using a debit card, right? So really rethinking what is the role of the employer, much like Uber's done in rethinking what's our role with our driver partners. Rethinking what payroll looks like. Payroll is built today to make the company successful. We do it every 2 weeks because that works for us. Well, it might not work for you as an employee to get paid every 2 weeks. There might be some other time frame that makes sense. And so can we personalize payroll down to the individual level? We have launched this in, I think, 7 markets now, 7 to 10 markets, piloting across 7,500 employees. And our take rate is nearly 50%. Of people are like, yes, this is phenomenal, I need this help. And it is about solving day-to-day problems. Emergency loans available, access to credit that otherwise you might not be able to receive. Really rethinking, what does it mean to be a borrower? If you are a 10-year employee with a perfect attendance record who's an accrued bonus of $1,000, accrued vacation of $2,000, and you need a $1,000 emergency loan, but you have a 540 credit score, why wouldn't we give you a loan for 6%? that's coming out of payroll, because we already know you're a good credit risk because of these factors, as opposed to something different that happened in your life. So it's rethinking what is our role as an employer. Now, it's not to do that as an employer. You need to have a third party. But the idea is, as an employer, we need to start buying access to platforms that do not take money from the financial services industry. And that's our core belief, is that every solution we bring, every dollar that would normally come back to a financial services industry as a commission or anything like that, that goes back to the employee. It's their money. We shouldn't be taking money from the financial services industry to make money, because that's part of the problem. So we completely rethought that.
Interesting.
I love what you just said there, Shawn. So Uber generically is known as a moderately disruptive company. And one of the things that I see in my purview, looking after financial services at Uber, is that there might be an opportunity to disrupt some of the traditional financial services providers, especially in respect to opportunity that we can create for our drivers and partners. We are very, very aligned on saying it's not our money, it's theirs, our customers. And my team's job is to take every dollar earned on the platform and make it 20% or 30% more valuable in the real world. And how we do that is we seek to offer products that have no fees, because we don't need to charge fees. We seek to look at the things that we would otherwise do that we can use with our buying power to help create opportunity to lower the cost of services that the drivers and partners would need in the real world. We recognize that time really, really matters, and we have some drivers and partners that take their earnings 5 times a day. So no 2-week paychecks, no weekly paychecks, no daily paychecks. It's, I drove, I spent the money. We have people that drive on our platform to pay for a cell phone bill, and then at the end of the day, they need to pay for the for their daycare for their kids. And so they go back on the platform, work for a couple more hours, have that money for their daycare. And then they need money for dinner, and so they go back on the platform and buy dinner. And our job is to create a 2-sided opportunity. One is an amazing place to work, where if you need it, we've got it for you. And then when you need the money, we'll get you access to it as quickly as possible. Because the notion that we should hold on to their earnings for 2 weeks because it helps our balance sheet or something, it just, I don't understand.
It doesn't. Okay. You know, you both have spoken a lot about just not only the work that you are doing within your organizations, but more so in terms of how do you think we can start measuring outcomes when we think about financial health, financial programs, financial wellness programs around that. I think one of the challenges that most employers are starting to face today that have been in this space is, how do you truly measure outcomes related to employees? And more so, are we seeing that return on investment related to the business? And you mentioned something really interesting, Peter, out here from a disruptive perspective to say, well, you know, a traditional carrier may be looking at financial wellness outcomes from a different perspective than maybe, right, someone like Uber maybe. Can you share some insights around, or maybe even elaborate, because you both touched upon how you're measuring outcomes, but where you see some of the challenges and opportunities around that, and more so, is that process where we will start seeing outcomes as quickly as what you would see with a traditional product, or is there like a time that's involved, you know, to really kind of give it the time to truly see that level of outcome that's desired for the business?
So I would say that success for my team and for the work we're doing in financial services will most likely be measured in the simple, most basic attribute, which is average daily balance. And for us, that means that people earned on the platform, they put it in their debit card that we give them, and they don't spend it immediately. And if we can help people get to that place, we've actually achieved something. And it's hard, because we are relatively new, or we're a place where you can do some work and get paid in near real time, and we create that safety net in many ways. So a lot of our the value that we create for people is this ability to take what I create in the real world and get paid for it as soon as possible. And where we see some really interesting behaviors is the more people that say, actually, I don't need to use the money right now. I'm actually okay with getting it once a week. And as we sort of look at our patterns of spending and behavior on the platform, the raising up of that average daily balance is going to be really important to us. And we see that in real time. So the outcome analysis for us, we're extremely data-driven. It's real-time, global. We can see it all around the world. And you should watch for us to launch these types of products globally, because I don't think it's appropriate or correct that the only people that get access to opportunity are in one particular country. We build products that are great in Mexico, as well as they're great in France and great in Italy, super good in US, fantastic in Australia. Opportunity is universal, and our job is to make it possible for them.
Yeah. I think that's great. The other thing I would share is that we think about measuring outcomes in two ways. One, there's the impact on the business, right? So can we retain employees at a higher rate than, say, our competitors? Can we attract talent more effectively? Can we be more productive? Can we reduce absenteeism, right? And we have a lot of programs from a HR perspective that we consider as products that are all driving toward that same goal. So we try not to measure this purely on just this one aspect and say, did this program bring the ROI? It's really a suite of services. So you're looking at all those traditional metrics. The other side of it is we have to talk to our employees. They are customers of these products. And so we do ENPS scores. We're looking at doing transactional NPS scores for all of our service providers, for all the products that we have for our employees. And so part of it is going to be, what do they think? Is it really helping them? And if it is helping them, it becomes a simpatico relationship with an employee. The value proposition becomes so strong that that you know you're driving value with the programs that you offer. We have to, in some ways, be much better at thinking about our employees as customers of our programs. And I love what you said earlier about everyone as a customer, including, of all your services, Peter, because that's what's so true. And I think employees are tired of being treated as if they are not important from that perspective, right? If we can use data and marketing techniques to attract and engage people in our products, we can do the same thing for our employees and make sure that we're delivering the right things.
Right. No, that's terrific. You touched upon absence and productivity, which clearly is a huge focus for all employers, and more so, I think, the big focus around talent. But we are in an economy, and I think we're going to continue to evolve and continue to increase in that spaces where more and more employees are now starting to take on independent work, and clearly we see that, right, with your organization. But as we start seeing independent workers increase, as we start seeing, the whole notion of the gig economy, where we've seen a lot of great thought leadership around that. What is the guidance, or what is the insight? There's a lot of different perspectives around how employers need to be starting to think about products and benefits and how they retain and attract their employees in different and more engaging ways. Can you share your perspective around how maybe employers are going to have to start thinking about just benefit solutions differently as they start stepping, into the future?
I would say that one aspect of many economies, many governments, is a lack of recognition that the majority of the services, such as the traditional benefits that you might have at an employer, and things like 401k and others, have no connectivity to a gig economy worker. Right. You can't get a 401k if you don't have a traditional employer. And many of the things that you would just take for granted, like health insurance, forget it. Like, yes, okay, there's the ACA and stuff like that, but even that's at the edge and the margins of availability. And it has a whole opportunity for society to recognize that work is changing, and the way we think about protecting and developing our people, our society, needs to adapt to that. And I don't think we've done a good job yet of integrating that into society. But that's the opportunity for us to push the marketplace to be better, because fundamentally work is changing. People are doing 2 or 3 different jobs every day, and that's okay. And if they can't find a way to even just buy the services that they need, we're failing them.
Yeah, I'd say, we're, unlike Uber that is already deep into the gig economy, we're not anywhere near that. But we've started thinking about it. And one of our initial premises going in is, if we are going to offer folks and we're going to create opportunities for folks to do gigs with us, we have to think about how do we build something similar from a platform perspective that sits over here for this population. Granted, they can't access 401k because they're not employees, but there are IRA type programs you can set them up in. There are exchanges for healthcare. There could be access to other services. And so you create a platform. You guys for a while used Stride Health that did that, right? You create this platform that sits next to your employee population and allows people to either go back and forth between the two, or allows for a different type of worker to be engaged with your company. And we just have to think differently, and we have to not be so concerned about the differences between those two as much as the opportunity to access off of those two platforms.
Right.
Absolutely.
No, I think that's terrific information, and we're almost at time, so I'm going to take the opportunity here to close. I think we've heard some really interesting themes around not only some of the challenges that I think that employers are facing today, but where some of the key focus areas lie, whether it's looking at needs-based solutions, really understanding employee preferences, and making sure that as employers that we're very closely connected to the data piece of it, as well as understanding what is it that employees need, and more so focusing on how can we be driving outcomes not only for the employees but also more so for the businesses. Peter and Shawn, thank you so much for a terrific dialogue. This was really great information, really exciting with the focus around financial wellness and how continuously I think the innovation around employee wellness is going to be important. So thank you for the dialogue today, and thank you everyone. Have a great conference. Thank you.